Good morning, everybody. Today is Monday, January 12th, and this is the pre-market analysis for broader markets and Tesla levels, and we go over the some basic Tesla option trade strategies, 5-minute opening range trade strategy, along with certain strike prices I use. So if you're new to this channel, hit that subscribe button, and then also hit that thumbs up button, like this video. And then also, if you go down in the description down below, you can join the Discord community for live trading from 8:30 a.m. to 10 a.m. Central Time, where I go over basic trade strategies and answer any questions that anybody could have about anything regarding trading. Going over economic data for this week. I don't see anything for today on the board here. Tomorrow, I think we do have some quite a bit of economic data this week, though. Tomorrow, you have core CPI at 7:30, month over month, year over year, and then good morning, Anthony. And then let's see. After that, new home sales at 9 o'clock. I don't see anything after Tuesday. The rest of the day there. Wednesday, again, pre-market, you have core PPI month over month, core retail sales month over month, and that is at 7:30. And then I'm not sure about this October data for the PPI and stuff. I think it's all related to the pre-market. And then you have Paulson speaks at just before 9 o'clock. I'm not sure if anything is going to impact that. Then you have existing home sales at 9 o'clock. Could move a little, could do a little movement there on the market. And I think something that's not on here that could move the market. I think the Supreme Court may be ruling on the tariffs, whether they're going to make a decision as far as rolling them back or not on Wednesday the 14th, or make a decision to push it to a further date. So I think Wednesday of this week, I think there could be some news coming out on what the Supreme Court's going to do on that. Getting into Thursday, I don't see anything on Thursday. You got actually you do. You've got unemployment claims. And this is all pre-market, 7:30. Philly Fed the Philly Manufacturing Index, that's at 7:30 as well. Nothing else after that for the rest of the week. Earnings, I didn't see anything pretty much on the earnings. I saw Delta tomorrow, maybe BlackRock on Thursday. I'll go over the earnings a little in more detail tomorrow. Let's get into the broader markets. Again, hit that subscribe button if you're new to the channel. Hit that thumbs up button and like this video. And then also join our Discord community for live trading from 8:30 a.m. to 10 a.m. Central Time every morning. Let's go into the ES like we always start. I had a little pop. I wasn't trading on Friday. I did a pre-market analysis before I started traveling here. I saw we did make new all-time highs, and then we came right off of it. So I see pre-market right now, it's pulling back, and so it's struggling to have some full push through after we break the new highs here. So you have to respect that. So could have some downside. I suspect that we're going to have a choppy year. There's a lot of things that are going to be coming into play. You have a new Fed coming in. You have whether these tariffs are going to be rolled back. You have midterms. So I would anticipate it's going to be a pretty volatile year up and down. So I would not be surprised if you do get some kind of hefty pullback at some point this year. So you're going to have to respect that. You have to respect this move right now, even though there's not a lot of volume. You did not get a good follow through once you made the new highs on Friday. So I would say here on the downside right now, you're still above these moving averages here. So you're still above the 20-day SMA down here at 69.2631. I would say that for today, I think your pivot point today that you're going to want to be watching is this 69.5425. I think if we lose that, that's going to be your line in the sand for today. I think that you're going to get some more downside here. Maybe you pull back into the 69.3225, down to that 20-day SMA. If you lose that 20-day SMA, I think you pull down to that 69.05. Further below that 69.05 is that 50-day SMA at 68.8895. And then below that, you have some regressional trend line that I have down here at 68.4698. Below that, you have the 100-day SMA sitting at 68.0674. And you can see, though, it's still, it's still pushing higher and still trending higher, even though you do get the pullbacks. Pullbacks, even though nobody likes them, they are still healthy for the market. So you can see, big moves and then pullbacks, but we are still, as you look at this, it's still trending higher. So the market can't go straight up without any kind of pullback. So unfortunately, this is part of the market. So I would not be surprised if we do pull back to some of these levels here that it just went over. The 20-day SMA, I think, based on where the market's moving right now, pre-market, I think that may be a no-brainer to hit. Maybe not today, but I think at some point it pulls back to that level. And then if we lose that level, we come down to these levels that I just called out, 69.05 rather, and then the 68.88.95 50-day SMA. And then if we lose that 50-day SMA, we come down to this regressional trend line that I have down here at 68.52.17 level. And then if we lost that, we come down to the 100-day SMA at 68.11.05. On the upside, if you do get a push on the upside today, I think you're going to have to get above this 69.68 to push higher, hold above that. Pre-market, let me see what pre-market is doing here first. Yeah, so this is the opening day trade from Friday here. So that's 69.73.17. I would say that that's going to be a big level to get through. I can even draw something right there. So 69.73.13. You would have to be above that level in order to continue to push higher for this morning. I could see it, the market pushing into that level and rejecting, and that could be your resistance level for today. So if you did get above that and hold above that, then I think you push higher, and then I think you can recap all this pre-market, just fading down here, not with a lot of volume. However, you have to respect this volume that happened at the close on Friday. I was not watching the market trade, so I didn't get a feel for it. So that's another thing to keep in mind too. When I'm away from the markets and I'm not watching the markets live, you lose a feel for it. So you have to be careful when you're away from the screen and you're not watching the markets to not get crazy when you cut your first day back, because something I learned a long time ago, I asked a very experienced trader when I first started, I said, is there such a thing as feel for the market? And after the first response out of his mouth was absolutely, there is feel. 100% you feel the market. The more you have computer time and you're watching your markets, whatever market or whatever equity you're watching, you get a feel for how they move. It's something that you cannot teach. You have to spend time and watch how it moves. It's just like anything. If you want to get good at something, you spend time practicing it. And the way you practice how to become a good trader is you spend time watching how they move, certain hours when they move at certain times of the day, when you get the good follow through. That's why, one of the things that we'll get onto later on in this video, the 5-minute opening range, why that's such a main part of the strategy, because that's the heaviest volume of the day. So anyways, let's get into the NASDAQ. The NASDAQ failed, pretty strongly as well. You can see the NASDAQ, it's created a nice little double top up here. I did not change any of these levels that I had here because I did not trade on Friday. So you can see that this red rectangle I had up here was a huge resistance level. So if you were in the market on Friday and you had these levels marked off that I had up here, you were able to sell with confidence there, knowing that if you sold, up at these levels here, you had your stop loss up at that, that high set back in November of 26,034 level. But you could see it rejected it like a champ, creating a double top up there. And so now these levels right here, had I been, on Friday, I would have left them as a red rectangle and saw how they performed. And if they supported and we came into today and the market was above that, I would have changed this red rectangle to a green level, showing it support. But as you can see, we lost it in pre-market. So I am still leaving this as a red rectangle, showing that if the market pushes up into that and you are trading NASDAQ futures, I would say that this is still going to be very heavy, and it's still going to be a level of support, level of resistance rather. And as far as this level right here, I'm still leaving that red also. Now, later on today, If the market does pop higher and we could see that this level holds, tomorrow we come in, I may be able to change this level to a green support. So you can see right here, the reason why I have this as a red rectangle, because we came up here, saw this big wick right here, it rejected this level. We came up here and then it rejected it again, popped through it. I thought at this point, okay, well, when we pop through right over here at this level here, it's 25,752.74. We held this level pre-market. At this point, I was getting ready to change this to a support level. But then as you can see, we popped below it, came back, tried to regain it again, and then we lost it again. And now it's rejecting this 25,007. It rejected the 25,007, I would say 730 level, and then regained it on Friday, and then came back down and tested it again. So it's a good chance this could be a support level starting to happen right now. We'll see what the market does today. So if it can regain this 25,750.75 level and hold, this could very well turn into a good support level to move higher. If we reject this level, this is going to stay a red rectangle, showing that it's still resistance. Right now, I would say that this is still a resistance level up here at 25,815 if you are trading NASDAQ futures. If you do pop through that level, and I would say if you get through this 25,843.98 level, you're going to push into that 25,881.25 level, which is an FMOC low back in December 10th. I would prepare for a little reaction off of that level, and then if you can get through that level, I think you can make your move back and to get up to these highs here from November, and then December, the November high 26,034, and then in that weekly high from December 1st at 26,120, I say 26,120. On the downside, if you do lose these moving average levels, it came down here nicely off this 50-day SMA, so that's a good sign right there. It bounced right off of that 25,634.26. It's still holding this 20-day SMA at 25,660. So we are still above those moving averages. That's positive. The 100-day SMA, 100-day moving average is way down here, 25,258. So if you fan out a little bit and you go look at the, more of a holistic view, same thing. You are still, even though you get these big pullbacks, it's still trending up, right? You got to still take a look at what this is doing, right? So made new highs, came down here, but it's still, now it's starting to work its way back up here. So I would say if you can get above that 26,120, and this doesn't all happen in one day, if you get above this 26,120 level, I think that if you get there, then you can push up into this midline regressional trend line. Obviously, the all-time high is first is 26,670. And then in this, then you would definitely get a little reaction up here at this 26,720.10. Okay, so not necessarily it's going to happen all in one day, but these are levels that you want to look at first. So that first level, if you get that 26,120, you get above that, I think you're going to push. You're definitely going to get up there, and you're going to touch that all-time high at some point. I would say in the next month or so. And that's it. So the main thing though is you're going to have to hold these lower levels, moving averages here too. So that's going to be big too, right down here. So if we do test this lower level down here, 25,600 and change, that's going to be important. If you do lose this level, then I think that you're going to really feel some lower downside here. You got some gap up levels down here. 25,412 that could get filled in a hurry, but we can address that later on when the market starts to develop throughout the week here. So you can see what happens here, but definitely a double top forming up here right now. But hopefully we'll see, maybe we can get this created a nice little speed zone in the post market from Friday. Maybe some kind of news can push this through. Maybe the tariff news will give us some kind of quick movement there. So let's get into Tesla right now. Again, if you're new to the channel, hit that subscribe button, hit that thumbs up button, and like this video. Tesla. So Tesla, I did not trade. I was not here Friday. Tesla had a nice little move on Friday. Let's take a look at our clean POC levels. So those of you that are new, I have these point of control levels that are automatically set. I have a script on my computer here that sets a yellow line here, and it shows where the heavy volume is traded at a certain price, and it plots a yellow line, and it shows where the price is trading the most during that day. And then it creates a level, and then at the end of the day, if the market doesn't go back and touch that level, I leave that level open and I call it an open point of control. So we still have an open point of control here set from January 5th at 455.09. And I leave these point of control levels open until they get hit. And once they get hit, then I take them off my screen. So you could see that, let me just give you a little more room here. So the further out I go, you could see, there's certain days where I'll have these levels that are open. Let me just give a better example here. So, for example, let me see here. So this is a good example that we have right there. But so we could take this one for an example right here. So this from January 7th, there was a point of control that was open, and that was 436.62. So the market opened up down here at 424, and then later on in the day, it came up and it hit this level, right? So then I took it off the screen. So this was on the screen, and then the next day when I came and I did the video, I showed everybody I took that off the screen. So this is until it gets hit, so meaning that the market closed, it closed right here, and so then I plotted a line here because this point of control was still open, right? So if I plot a line, and I could show you like what I would do right there. So that line would be a point of control level that would be open. I would plot it, and I would just label it point of control, and then POC. So that level's open right there. And then when the trading starts throughout the day, I have that open, and I know that this level is a point of control that's open. And then the market opens, and then once it hits that level, and as you can see, market open all the way down here at 424, and then it rallied $12 and hit that level. So you can see how valuable a tool this point of control is while you're trading, and you can see movement in the marketplace. And then you can take advantage of that, right? So now I'll show you later on in the video here how to capitalize that, how to monetize that, right? So I'll just get rid of that drawing right there. So that being said, brings us to current day right now. We still have this open point of control here at 455.09, right? So that's $14 higher. So am I saying that when the market opens today, oh, start buying right now because it's going to go up there? No, I'm saying that when you start seeing price action, you could see where that price action may take you. Now, also to keep in mind, these act as a support and resistance level. So if this is above the market and the market pushes up there and I'm trading during the day, one of my trade strategies is to use this as a resistance level that the market gets up here. I may go short up there, right? So I have several different trade strategies that I'm not going to go over right now, but that I use throughout the day. But this is how I make my decisions trading throughout the day. So let's get into the 5-minute opening. So get into the levels right now that I like. I think for today, you want to hold this 439.74 level. That's going to be an important level. This is January's high for the month. So if you hold this level, I think you can push into this 50-day SMA at 444. It's 43. That may have moved. Let me just take a look at that. No, it's pretty much spot on. So we're below this 50-day SMA. So in order for us to move higher, we're going to have to get above that 444.26 level and then pop through Friday's high at 449.05. If we get through that level and then we can get through September's high at 450.98, we're definitely going to come up there and we're going to test that open point of control level from January 5th at 455.08. We are below the 20-day SMA, which is at 461.82 level. However, we are above the 100-day SMA, which is at 423.60. So, if you're new to trading Tesla, Tesla's not for the faint at heart. You can move $20 to $40 in a day. But if you have the proper risk control, if you have the proper risk control in there, that shouldn't matter how many dollars it moves within a day. So that's on the upside there. You have to regain that 50-day SMA in order to move higher there. On the downside here, if we lose that 439.74, I think we're going to come and test January 2nd's low, 435.30. If you lose that, we're going to come down here and test this Fibonacci level I have down here, 431.67. And then if we lose that level there, I think we can come down here quickly and we can test that 423.60 level, and then which is the 100-day SMA. And then unfortunately, if we lose that level, I think we come down and test December lows at 422.12. If we lose that, we come down on this lower regressional trend line at 416.50, and then October's low at 411.45. That is 30, it's 30 some odd points lower, or 20 some odd points lower from this low from January 2nd. So if you did get that kind of move, we'll start addressing these levels tomorrow. I'm not sure if we're going to get that kind of move today, but you never know with Tesla. So hopefully Tesla can, let's get rid of this. So if you look at Tesla, though, it creates these speed zones, and I go over these speed zones all the time. When you have a massive selling and no buying, eventually it recoups itself. So it's possible it recouped this speed zone right here, and now this is where it's showing the resistance from Friday at 448.10. You can see how it resisted. It came right off that level nicely, right? So this was a low, so it came right back up it came right back up to that 448.10 level, rejected it, and so now it showed rejection on Friday, and now it's trickling back down. So the same thing on the downside, when you have mass selling, it creates a speed zone on the upside, and the same thing on the reverse side. So if we lose this 439.74, I think it's going to be created a speed zone on the downside to this level right here, to this 431.67 level, and like I said, if we lose that, I think we could come down to that 422.12 level pretty quickly. So let's take a look at the 5-minute opening range trade from Friday, which looked like a pretty good trade if you were trading it. So again, hit that subscribe button if you're new to the channel. Hit that thumbs up button, like this video. So the 5-minute opening range trade, what we go through if you're new to the channel here, we plot. This is an automatic script again, and what happens during the first 5 minutes, this green bar, it moves and it fluctuates up and down until the first 5 minutes is done. And when the first 5 minutes is done, this stays stationary throughout the rest of the day. So on Friday, the first 5 minutes of the day, the low was 430.39 and the high was 436.01. So that was the range of this first 5 minutes. And why do we do that first 5 minutes? Well, if you look down here below, this is the volume. So if you look, the first 5 minutes of the day, it was the heaviest volume until the very end of the day, right? So that pretty much dictates the direction on where the market could go for that day. So now, as far as the 5-minute opening range trade, you wait till it breaks one way or the other. So if the market's breaks below this range, you're looking to take a short. If it breaks above it, you're looking to take a long. And then how I do my trades. So, real quickly here, the high side of this trade on Friday was 436.01, and you got up to 449.05. So you could have gotten about $13 out of that move if you were patient throughout the day. But there was multiple trades, so you don't necessarily have to hang on to one trade throughout the day. You can scalp. You can get in and out of trades all day long. There's multiple trade setups that happen throughout the day. So now how I monetize on this. So what I do is I trade options. So now I'll trade, it's Monday morning, and I use Friday expiration dates for all of my options. So I have my calls on the top here, and I have my puts on the bottom here. So if I think the market is going up, I'm buying a call. If I think the market is going down, I'm buying a put. And how does that translate? So now when you're buying a call, you're buying the premium price for the market to move, right? So I'm not buying the $441.15. I am buying $6.60. This is where it closed on Friday. So if I buy a one lot, it costs me $661 for this to move, versus if I bought a one lot of Tesla of the stock, cost me $440, right? The difference is that it cost, this moves in $5 increments. I can get in and out of my trades, right? So what happens is if you buy a one lot here, I know exactly where I'm going to go with my trade, right? So if this moves in $5 increments, the market moves 5 cents, I make $25, right? So the one thing that I'm leaving out on this whole factor here is it costs me $660. However, when you're buying an option, you have to multiply it by 100. Okay, so if I buy one lot here, I multiply the trade by 100. And so that what happens is if I buy one lot here, it moves up 5 cents, I make $25, right? So For every one lot you buy here equals 100 shares, excuse me, of the equity price. I know I'm not doing a very good job at explaining this right now, but I'm going off my script on what I normally do here. So, but anyways, long and the short of it is, my expiration is on Friday of January 16th, right? And so now I'm going to have 450 calls up here. So it's going to open up, I would say, where did we close on Friday? So we closed pretty close, 445. So I would expect this premium price to open up a little lower, probably in the $5, maybe high fives range, maybe $5.50 range. And then this premium price here, I would say that this is probably going to open up probably pretty close, maybe in the $5 range as well. And so now what happens is I will trade this when the market moves down. This premium price is going to move up on the put side. And if the market moves up on the call side, this premium price is going to move up. So if you buy a call and the market moves down, this premium price will move down because you want the market to go up if you're buying a call. But if you buy a call and this moves up, this premium price is going to move up. Premium is the same thing on the put price. If you buy a put and the market moves down, this premium goes up. If you buy a put and the equity price moves up, this price will move down. And that's pretty much basic options trading here. So if you want to learn more, you go down in the description, join the Discord community so you can come and be in the trading room from 8:30 a.m. to 10 a.m. Central Time. And I do live trading there every morning. So if you're also new to the channel, hit that subscribe button, hit that thumbs up button, like this video. If I don't see you in the trading room, I will see everybody tomorrow. Have a great, safe trading day, and I will see everybody later.